For decades, these fields were a steady source of prosperity in Texas. But when U.S. crude prices fell deep into negative territory last month, oil workers suddenly found themselves on shaky ground.
I've never been laid off in my life, so I didn't cry. I felt really bad for the people on the other side. But what was interesting, the irony of it is the night before I told my husband, I said, price per barrel is negative $43. Said, I'm getting laid off.
The industry was hit with a 1-2 punch. First was a price war between Russia and Saudi Arabia in a battle for market share. Then came COVID-19, which froze the global economy as governments tried to contain the pandemic.
The International Energy Agency in Paris estimates that this month, worldwide oil demand will fall by 29 million barrels a day. That's almost 1/3. That's a shocking decline.
In the US, storage facilities were filled to the brim with oil no one wanted. West Texas Intermediate crude closed at an unheard of negative $37 a barrel on April the 20th.
There's so much supply that not only would you not get paid for your oil, you actually had to pay someone to take it off your hands.
Since then, market conditions have recovered. The world's oil exporters have agreed to cut output to give prices a lift. And major economies from Italy and Germany to China and Japan are easing lockdowns.
What a difference a couple of weeks makes with oil. You know, a couple of weeks ago we were talking about negative oil prices and now we're back to 20.
But the global economy is expected to shrink 3% this year. That means industry profits will remain low in Texas and everywhere else. Paolo Montecillo, TRT World.
Well, for more, let's go to Ellen Wald in Jacksonville, Florida. She's president of the energy industry advisory firm Transversal Consulting. She also wrote the book Saudi Inc. Good to have you back with us, Ellen. Now, oil prices are easing back after surging over the last 5 days. Do you think traders were perhaps a bit too optimistic that as more and more countries begin to gradually reopen the economies, demand for fuel will pick up?
I do think there was quite a bit of optimism in oil prices earlier this week, but I'm not surprised to see the gains being pared back a bit because we're not going to see an immediate return, I think, or even a long-term return to where demand was. This is going to happen in fits and starts, and it's going to be volatile for oil prices. And I do think that a lot will depend on supply, both supply and demand, but very much supply and how much producers are actually cutting. And the news is really mixed on that. In the United States, the EIA reported today that production is down to 11.9 million barrels per day, which is off from the high of 13 million barrels per day, but is still pretty high up there. And then we're hearing reports that in places like Iraq and Russia, that production cuts are not happening immediately and are going to take some time to really materialize if they do at all.
Yes, and in addition to that, the American Petroleum Institute says US crude inventories rose by 8.4 million barrels last week. So the supply glut is still going to be with us for a while, isn't it?
Yes, exactly. And the American Petroleum Institute estimated that it would rise by, that the increase was over 8 million barrels. It actually, according to the EIA report, didn't increase nearly that much. The increase was only 4 million barrels per day, but still, that's a lot of oil, and we've got a lot of oil out there. There's also something to do with gasoline demand. We're seeing gasoline demand increasing, and in fact, there was a draw in gasoline stocks. But what's curious is that refineries are starting to pick up again, but they're not anywhere near the full capacity that we're used to seeing at this time. And so while it will look like more gasoline is being utilized, when you compare it to what was happening last year at this time, it's really quite a bit down.
And as we heard in Paolo's story, it's been barely 2 weeks since the price of US crude crashed into negative territory for the first time ever. And now we're seeing prices double in 5 days. Do you think then the worst is over for oil markets?
I think it's very unlikely that we're going to see a crash down into negative territory again. But it's not smooth sailing from here on out, and it would not be surprising to see prices take another dip, take several more dips before we really come out of this. It's not going to be just a steady climb upward. We're going to see some dips back down. Hopefully not below the $10 per barrel, which is where we were last week. And I don't think we're likely to see negative prices again, but we're nowhere out of danger here.
Okay, Ellen Wald from Transversal Consulting, a pleasure as always. Thank you.